Hi friends, let's discuss today and the post market report 5 May 2026. So I have prepared these notes based on the observation of the market today. So market is wrapped up for this week, first week of June. So we are in the 5th June, right? So Indian equity markets witnessed a volatile trading session today as investors reacted to the RBI monetary policy announcement and the governor's commentary. So the governor's commentary at 12 started, I think, today. I was also watching. So the markets wrapped up on volatility because of this RBI announcement today. So that is how this point we have captured here, because since we have witnessed the volatility. Key RBI takeaways during this announcement: RBI rate kept unchanged 5.25%. This is while we have already expected this, so there is no surprise from the RBI. Accordingly, they kept the rate change unchanged. So neutral policy stance retained. So that's how this is a 5.25%. GDP growth forecast reduced to 6.6%. So it was around 6.9 to 7 before, and now it is 6.6%. This impacted the market. This point impacted the market. I will show you where it was. The impact was inflation forecast increased to 5.1%. So inflation also, there is an increase in the inflation 5.1%. Before it is 5.7 or 5.9, so it is increased to 5.1%. So this is also impacted the market. Let's discuss on that point, where we'll see in the chart how it has been impacted, so that next time also we can have a memorize, and that whenever there is a RBI policy announcement, when any GDP growth and inflation forecast, anything they project, then we will know how the market will impact, right? So why the market, why the RBI is unchanged the rates means RBI remains cautious due to global issues. That's why they kept the rate unchanged, because rising crude oil prices and everything, if they increase the rate also, it will be a different impact on the market. So that is how they remains cautious due to global issues. Factors influencing markets, if we see today: continued concerns over Middle East tensions still there. Elevated crude oil prices also there. Currency market fluctuations, global investor risk sentiment. So FIAs are continuously selling the stocks. So based on that is also one of the factors influencing markets. So these are while these are the factors, there is we will see sector performance. Outperformance today: banking, financial services, select auto stocks. So these sector stocks are very good today to trade, because they are in uh, gain positions. These are the gainers. And and weaker sections are metal stocks, oil sensitive sectors, import dependent industries. All the stocks witnessed weakness and selling side. So sell off happened in the stocks. So while market sentiment, the overall sentiment remains cautiously optimistic. So cautiously optimistic means, there is buyers that buy, there is a buyers at the levels, but they are a little bit on optimistic basis because of the rate unchanged, and other matters, like settlement in the war between US and Iran, all these things. So but they are cautiously doing this, because at range only they are buying. So the market looks like at range only it's buying out. So that's why it is cautiously optimistic. We have explained here. The RBI has provided stability by avoiding any surprise tightening measures, right? As we discussed, they didn't surprise the market today by keeping unchanged the rate. However, rising inflation expectations and global uncertainties continue to warrant caution. Key takeaway, key takeaway for traders when we come to this point: today's policy outcomes suggest that liquidity and growth remain supportive for equities, but market direction will continue to depend on crude oil prices, FII flows, global geopolitical developments, and corporate earnings. Coming to the corporate earnings, we are into the June. So after June, July and all, first quarter results will come back, right? So during that, that is also one of the reason for the cautious, right? Traders are cautiously optimistic. So corporate earnings are also there. So we have to keep in mind. So our view, markets receive stability from RBI. So but sustainability of the rally will depend on how inflation global risks evolve in the coming weeks, right? So we have to be closely watching about inflation and global risks. And also GDP. So trade with discipline. We need to trade with discipline in the coming week, because coming week still volatility we can expect at the lower levels and the higher levels when the market reach at resistance and support levels. So we have to follow this price action based on the support and resistance levels. For the support and resistance levels, let's have a look on open interest basis. Open interest, so I have pasted here capturing the open interest for tomorrow, because once when the market opens, and this open interest will keep on ever changing. So this is the build up positions today in the intraday. So we'll keep this one in this video so that we can refer later what are how many contracts and where. So when we see this 23,300, there is a strangle. 23,350 while it is middle one, so it's no impact much, but we have to keep in mind. So 23,300, 23,400 and 23,500. So when we see at largely 23,400, around 60 lakhs contracts, puts and calls, taken a strangle. So expect the market today, on the next session also to revolve around 23,400, as discussed yesterday in my video post market report. Also we have explained about 23,400 to 23,500 market will stay there itself. So the market already 23,360, around 23,400 only. So that means the market is being neutral, right? Every day when it goes down, dip, they are buying, and when it rise, they are selling and bringing back the market in the same level. So it has been neutral. So the neutral means, the neutral suggests that this triangles 20,300, 23,400. So when you see largely, forget about 23,350, 400, 450. So 23,300 to 23,500. So the market is in the range of 23,000 to 23,500. So let's see on Monday whether this fate, like 23,000 to 23,500 range will change or not. So if the market goes to 23,500 and stays there, there might be a short covering will be there, so that the market will reach to 23,600, 700 and can expect a reversal from there. So that is how we will check on Monday how it goes, but the market suggests 23,000 to 23,050, 23,500. So based on the open interest. So 23,500, after you see there is no puts much build up. So 23,500 also there is a little puts compared to 23,400. So even anyhow, if the market goes to 23,500, the call sellers are ready there to defend, right? The defend the levels. So because 23,500 is hugely 90 lakh contracts above, build up is there in the call selling side and buying side. Coming to the 23,700 also there, and 24,000 also there. Huge calls build up, because if you see surprisingly the premiums here heavy in the call side still. See 23 to 24,000 still 12 rupees is there, and 23,722, and near to the OTM if you see 23,400, 134 premium is there still, and 23,300 for us. Market is at 23,006 and 23,366, right? So a difference between this is 66 points, right? 23,300 minus what is the market now, 23,366. So difference is 66. For 66 points, around 200 premium is there. It's a huge because of the IV. So because of the volatility index VIX, so much premium is there. So that's how these people are entering into this 23,300, 400, 500 strangles. So that the market stays again one more session is a neutral, then these premiums, right, fade away, vanish. These premiums will vanish huge, and on Monday. So and the next day, Tuesday, for the expiry, there won't be anything for the SIOTM premium for the people to eat. So for the sellers, so they might keep this one more session to neutral basis, right? So that's how it will be. So we have to be very careful in trading under these circumstances. That's how I captured this open interest, and then I placed this trade to be traded on the discipline note, right? Trade with discipline. So always trade with discipline. We will have how to protect the capital. We will roll out one session, because we need a big time frame for that. We will discuss on what is the capital and what is the percentage of losing side per trade, all these things. So it is not possible to discuss today. So in this video, the usual things are like, we have to keep in mind like global developments between US and Iran, and then crude oil prices, FII flows, and then we have discussed is about coming weeks, how the inflation growth news come up. So all these things will be a notable points, and then we have captured, we have to remember around what is the premiums. Premiums are very highly priced. 23,300 also, 190, and strangles at 23,300, 23,400, 23,500. So these three strangles are there. So the market, it can be battered down into the neutral position on Monday. So while opening is the concern, how the market opens, whether gap down or the gap up. So but even then the market closing will be at neutral, because the open interest suggests that way. So we have to be very careful while after market open also, because there will be huge decay in the premiums comparing to the Tuesday expiry. So accordingly, take concerns and trade. Thank you.